All right, good morning to any replayers. If you're a replayer, welcome to the show. You can still participate. You can tap on the screen for hearts. Hi, Joyce. You can, of course, share this broadcast. And if you have any questions for me, you can find me on Twitter or even Snapchat. And ask me away, because I... Good morning, good morning, good morning. Good morning, everybody's joining. I haven't gone to the gym yet, so a bit of a mess, but... As you know, money doesn't care what you look like, what you dress like. Money is just a way for us to live a life live our life to the fullest. So, if you're new to me, my name is Joannazarach. I do a daily money habits broadcast, and I talk about developing better money habits, which is really just a regular check-ins with your money. I advocate for a daily routine that comes to money. If money is important to you, you need to start paying attention to you. Just like if health is important to you, you need to pay attention to you. Or if relationships are important. And if all you think of money as is the ability to spend on things, then you may not hold on to it. And so money may not give you options. Excellent. I'd love to hear that. Yes. First step is to just utilize the tools. Thank you. I appreciate you telling me that. I advocate that. But today I want to talk about a topic that I started on yesterday, and I want to continue talking about it. So I talk about the 5 levers of wealth, which are income, taxation, investing, big purchases, and risk. And yeah, of course, I appreciate you for taking action. That's really what I'm trying to do, is get people to take action and take control over the finances, because it takes time to get to meeting a large goal, but so I do a decade planning. Like I'm in this for the long term. I don't know if people realize it. Like when I started doing this, I said, you know what? I think it's going to take people about a decade of following this, like being consistent. Now it takes you about 12 months to sort of get a routine and turn things around, really establish things. But it may take you a whole decade to get to where I want you to get to, which is financial freedom. But it's entirely doable. But today what I want to talk about is risk. And so I'm going to go through the various types of risks and how I would address it, or how I do address it. And so I want you guys to sort of walk through this journey with me. So I want to talk about just the main risks. And if you think of a risk that I'm not addressing, I would like to add it to my spreadsheet and talk about how we could mitigate that risk. And so when I talk about risk and insuring against it, or really it's having a plan, right? And so the reason I talk about risk as a factor in wealth building, because it's one of the things that really throws people off their plan. And actually, I just thought of another risk. This one's a good one. Divorce. So the things, we'll start with addressing things. And so we're going to go from a perspective of you're established. Sort of you have, there are people who don't have a lot of safety net, but we're going to sort of make an assumption of someone who's kind of doing okay, right? Like things are going well. They have a job. They have the income. They have safety, security, shelter. They're somewhere in the middle of the Maslow pyramid. And here are the things that can really throw off people's ability to accumulate wealth or to maintain their wealth. So first of all, one of the most important things that we have is our shelter, our homes. And I think that you need to know and address your home loss risk. And so I want to actually talk about both owners and renters. So what is the risk when you own a home? So people usually think of catastrophic risk as something that they're going to, that's going to really throw them off. And so catastrophic risk, it's like a fire or a flood or a total destruction of the structure of your home and all the property within. And this happens to people, right? If you live anywhere where tornadoes happen, you've probably experienced it, floods. We've seen, massive losses like New Orleans during Katrina. So those things can really sort of destroy the core of your being. And so having Obviously, home insurance, which is something that when you hold a mortgage is required, right? Because the financier wants their liability protected. So having homeowners insurance, reviewing that homeowner insurance policy and seeing what am I actually insured for? Like how much is it going to pay? I think people don't do it enough. They go, oh, I have insurance, and maybe they've established a policy 5-10 years ago and things might have changed. So always review your homeowner's insurance policy, see how much of your structure is covered and how much of your personal property is covered. And is it replacement? Is it value, like replacement value, or is it like current value, used value? Those are different types. The other thing that I think people do not expect when it comes to home is unexpected repairs. So home ownership can be a good thing, but it can also be, if you're not prepared for it, it can be a financial burden, can really set your sort of wealth building and your discipline out of whack, right? So unexpected repairs, people really need to set aside about 3% of their home value. Now that's just a ballpark. So if it's $100,000 home, make sure you have like in your mind, I need like $3,000 for some unexpected repairs every year, right? And why is it every year? Well, because some years you don't have any repairs, but some years they don't, right? And you know about property, right? And so people don't factor that in at all. They put all their money to a down payment. They barely make the mortgage and all the mortgage associated payments, all the home payments associated with it. Yeah, then they're like, oh crap, the roof blew off. Well, yeah, you're not able to afford it. So set aside 3% of your home value, right? So it's like, and you've got to, and you know, what happens usually when you first buy a home, hopefully you went through inspection if it's a newer home. So things don't fall apart right away, but they will, right? They will fall apart, and you need to have money set aside for your property maintenance. And again, it has to be money that's accessible at a pretty quick turnaround. So again, if you're so stretched that your budget can't accommodate that, really question the type of house. People overbuy on houses, the type of house you buy. So that's why I talk about self-insurance, right? So it's a combination of have insurance, but you need to be self-insured, which means you need to have assets that are available to you that may not be working as hard, that may not be in tax deferred accounts that you can access for home repairs. Okay, let's talk about renter's risk. When you rent, here are some of the risks. Obviously, you have loss of personal property. You're not responsible for the structure, but the personal property, like if you rent and something happens to the structure that you live, like again, fire, tornadoes, anything, and you don't have renter's insurance, it's not the landlord's responsibility to like replace your stuff, right? So if you're just starting out and you're renting and you have all your life's possessions in your house, in your home that you're renting, and it gets destroyed, and you didn't have renter's insurance, you're out of luck, right? And so renter's insurance is really inexpensive. I think it's about $150 a year. It's really, really inexpensive. So I had a renter's insurance when I first started out. Why? Because I didn't have a lot of money and I couldn't replace all this stuff. So have renter's insurance. The thing that also I would say is if you're a renter, you need to be prepared for the possibility of something changing, like landlord changing hands, like the possibility of moving out. Because you're renting, you do not have sort of rights to the property that you live in. And sometimes there's like really long-term renters, and they forget that like if things change, like this has happened in San Francisco, right? Like people are buying up for investment and they're like, sorry, people, y'all need to move out, even if you've lived there for 20 years, right? It's not a guarantee. So for renters, the self-insurance for renters is to have 3 months worth of rent is set aside. Why 3 months? Because if all of a sudden you need to move, you're not going to get your security deposit back right away. What you're going to need to do is find another place to live, and they're probably going to ask for a security deposit and first month's rent, and you have moving expenses. That's why I say 3 months rent. So self-insure with 3 months rent if you're a renter. So, okay, so that's a home risk, right? That's our basic need to be housed, like shelter and safety. So have that insurance mindset. And again, it's not that you have to be a pessimist. You just have to have a plan, right? And maybe your plan is to move back in with mom and dad, which is feasible for people who have mom and dads that welcome them back into their house. That's not an option for everybody. And also, it may not be something you want to do past your 30s when you're like, hey, I can always move back in with my mom and dad. That's for some other catastrophic needs, and I'll talk about those. Or buy a payment. Yeah. Yeah, save your money and invest it. Yeah, you got to hold on to your money. If you're not keeping your money, you're really not able to self-insure, right? That's why don't look at money as just a source for you to spend and buy things. Like you need self-insurance, and even making an account that says, look, this is my self-insurance account. I am insured against these things, property loss. Car risk. Let's talk about cars. Like really, home, car. Like what other big things do we own? Really, those are majority of people have those things. Your car risk. Two things. So one is if you have, I'm really, I've had loans. Yeah, put it in your budget, right? Put self-insurance in your budget. Add it in and say, I'm going to self-insure, and you can, that's going to maybe go into, because what happens when people really get into debt or really get into financial trouble is that multiple things happen at once. This is what happened in 2008. Lost your job, lost your home, lost your car, right? Like you were just not prepared at all at any of those aspects. And you need to be able to lessen the impact of that. And we'll talk about job loss, but let's talk about car risk. Two things when you have a car: the damage to your vehicle, like the loss of your vehicle that you're going to use, and also a liability. What some people don't think about is that the damage that you make to another person's property and the damage that another driver in your household may make to other people's property. That's liability. So you need to be protected. And by the way, not every single state in the US requires car insurance. So Illinois, it's required for everybody. You have a car? Reminds me, I need to register for my Illinois. When you do your registration, they require proof of insurance. So in Illinois, everyone's insured. There are some states that are no-fault states. If you move from a state to another state, you should review what their automobile insurance policy says. There's different rules in different states about who owes what for different types of damages. So if you've had experience before with claims, but then you move to a different state, you really should review what those rules are, right? So having car insurance is one thing, but understanding how insurance works within your state, every state's different, is really important. So obviously if you have loss of car, make sure you have a backup plan for transport, right? If you are using your car regularly in your life, like you depend on it, you depend for a commute, have a backup plan. What would you do? Do you have can you rent a car? Can you afford to rent a car longer term? Do you have Uber in your city? Do you have one of those zip cars? Whatever it is, have a backup plan. Say, okay, if this happens, this is my backup plan. And then know your liability limits. How much liability do you actually have? All right, let's talk about the big one, big risk, job risk. So majority of people are still employed by someone else. That means that somebody dictates your ability to earn, both in the amount and the availability of a job. So this is why I always tell people, don't just go to work and do your job. Be curious about the business. How healthy is the company that you're working with? How good is the industry? You guys need to take more interest in knowing what the risk is to your job. This is also why people advise you do not have a 401k plan in your stock of your employer, because if the company is going down and you lose your job and you lose your retirement portfolio, that's like a double blow, right? Diversify. So job risk. Job risk is two things, like you lose your job, and you might have lost your job because, again, the company's gone out of business, or they just eliminated your position, or you can actually lose the ability to do your job. Something changes in your life, something happens. You have, we'll talk about sort of disease, but something happens that you're no longer able to do your job. And so make sure you understand that it's not always know what's the replacement path, right? Like if you lose your job, what will you do to get another job? Which is like keep your resume updated, do it every 6 to 12 months, create some side income, right? Don't be dependent on that one paycheck. Have a plan. And if you can, have 6 to 12 months living expenses. And I know that sounds like a lot. And then the other thing is, if you're a 2-income household, here's the thing. I'm really a big fan of living off of just one income. And it could be the higher income, right? But if you're living off of 2 incomes and really stretching, if you have 2 incomes and you're living paycheck to paycheck, that's like loss of one job can also be really, really hard. So if you have 2 jobs, you kind of have a little bit of insurance built in, right? So if you have 2 people have 2 jobs, or one person has 2 jobs, and again, that might be a lot of work, but you have a little bit of built-in insurance as long as you're not so stretched. If you are a business owner, you really need to keep track of your numbers, because business failure is the number one thing. Yeah, thank you. And you know what? Even if it's just a couple people on, my Periscope just says a couple people, I'm happy to do this. And by the way, yesterday I was able to point someone to something else, to a lending club video that I made. I was like, everything's on catch.me. Yeah, so job risk, like just evaluate it. And here's the thing, it's not to make people feel scared, it's to say, hey, this is what I'm going to do. And you don't have to do it every day, right? This is not a habit you do every day, but every 6 to 12 months, like once you have a plan, and again, here, I'll show you, I just spreadsheet here, make a spreadsheet for yourself. Like say what could happen to your particular situation and what would you do? Literally write it out and maybe write out like plan A, B, and C, and here's also why. Here is why this matters. Because to write it out, because what will happen is you'll have to make decisions about how much insurance you want to purchase and how much you want to be self-insured. Like how big of a deductible you take. Do you take the disability insurance? So we'll talk about that next. Disability risk. Disability risk is basically inability to make the same income or loss of income for a time due to some sort of disability. And illness, I do long-term illness a little bit different because disability I think of as a permanent state. And so what happens is like if you're at a job, you may have an opportunity to sign up for short-term disability insurance. Now that may be automatically included, or you have to do that election at at every year. So inquire and see how much disability you have, just so you know what would happen to my income if I became disabled. If you're permanently disabled, there's actually Social Security for people who qualified that will pay you some amount of money. It's not a lot. Disability payments are a lot less than what you will earn, but they are a little bit, they can lessen it's not going down to zero. If you're self-employed, or if you're a high income earner, there is disability insurance. Here's the thing, disability insurance is extremely expensive. So I only really recommend it for people who absolutely have no safety net. I talked to my friend and she was talking about disability insurance. It's like $5,000 a year. It's expensive. I don't own disability insurance because I self-insure. The other thing is if I became so disabled that I'm unable to do anything, I do computer work. So, there's like a lot of things that could go wrong and I could still do some of my work. But, if you have to, you go, is there someone in my family who could take care of me and my small children if I became disabled, right? So if you have a spouse, you have some built-in insurance. If you have parents that are still, alive and in good health, and they are in good financial position, say, can I move in with them, or they move in with you, right? Like disability is something that you just have to think about and say, what would I do? Because the financial aspect of it, but also just the plan. So think through of your disability risk. And again, if you have no one in the world and you're a high earner and people depend on you, then you may need to spend the $5,000 a year on disability insurance, right? So just thinking about that. Think about who's depending on your income. Hello. Next one is, sadly, people don't want to think about it, but fatality. Like death happens. It will happen to all of us. I don't want to get really depressed about it, but you know what? When you're really old and you've kind of lived out your life and you pass, like people expect it. So I'm talking more about the unexpected fatality. Happens all the time. I see it, posts on Facebook, whether it's accidents, premature illnesses, just a lot. And the thing that happens that makes me really, really sad is people who try to fundraise for funerals, just think about what would happen if you weren't here. And then also, are you depending on someone, and what would happen if they weren't here? And sometimes they don't even have to earn income. They may just be part of your ecosystem. You don't know how much you depend on somebody till they're gone. So always, for fatality, it's really two things. Life insurance. I do recommend that if you have people who depend on you for their care or livelihood, so whether it's small children, or a spouse that doesn't work, or even if you're the non-working spouse, just think about it. Just have some life insurance. Like anything would help. And term life insurance is extremely inexpensive, especially for a person in good health. If you're elderly and if you're poor health, it may be trouble. You may have trouble getting term insurance because the insurance company be like, well, you're not looking so good, like a risk. But you may still be able to purchase some. Purchase $100,000. Don't purchase term insurance if no one, again, think about what you need from that. But I think everyone with children needs to have some life insurance. just because you just don't want to be in a position where you like, especially when you're the primary earner and something happens to you. Again, accidents happen. So have life insurance and have an estate plan. And I'll address it. Like I'm a little upset how expensive estate planning is and how inaccessible it is to the everyday person. And that's one of my things, the big things where I'd like to change it. Like there are some things that I find are inaccessible to people, and I feel like they're really hurting just the everyday person. Long-term illness, it's not just the loss of income. If you have long-term illness, it's not the loss of income, it's also the caregiving required. And it's similar in disability, but like a permanent disability, like you have to adjust your entire life. And illness may just be a period of time. So again, think about what your family support is. Again, in that way, when you're dealing with a health issue, that's a catastrophic event in your health. And sometimes the finances are something that just kind of drags behind you, and you eventually will have to catch up. That's why I talk about the risks. I added one thing here as I was thinking: divorce. If you are married with children or even without, divorce does two things. One is it creates a huge financial burden. If you're going through legal proceedings, it can be multiple thousands of dollars for people. The other thing, besides the emotional kind of thing, I'm just talking about financial risk. It does a couple things. One, you're splitting assets into two households. So your net worth from the asset base just got divided. But if you had two incomes, or even if you had one income at one point, or at some points, you are dividing, because the non-income making person is probably providing a lot of unpaid work. And that unpaid work has to be replaced, either because that person has to get an income of their own, or you need to start paying for childcare services. So divorce can be a real risk, and I think people don't think enough about it. And it's not you're planning for divorce. You're just going, what if that happened, right? Bonjour, comment ça va? No. So just plan for it financially. That's a risk. That actually divorce and medical bills are the two things that happen that put people in bankruptcy the fastest. I'm good, thank you. So I put healthcare. I'm gonna move the business stuff below. Healthcare obviously is a risk. Hello. So healthcare, medical bills, really medical bills, because if you're not, before you have medical issues, understand what your health insurance works like. And again, you don't have to know like the great detail. Just know like roughly, like, are there limits on your medical policy? Some medical policies have a lifetime limit now. They're like lifetime limit of $1 million. I do talk a little bit fast. I get very energized by this. But medical bills, like think about what would happen if you had a medical emergency. And again, it's a combination of what's your deductible, are there any limits, what would you do if you had to pay those medical bills, and self-insure, right? So medical bills are not so immediate, like a roof repair. You'll usually have a few months. That's okay. Je ne peux parler français. This is about, risk and money. So yeah, hopefully there's somebody in France that talks about similar topics. So medical expenses give you a little bit more time, but again, they can be a surprise at the end. So medical bills, you may have some, you may be able to access some of your, like, unfortunately, if you're in that situation, you may need to access them. But with medical bills, you should be able to get some sort of payment plan, right? That's not as immediate. It's more of a financial burden once you get all your health care taken care of. Business, if you have a business, one of the things that if you own a business, really be aware of, like, so what's your general liability? Like, what are risks do you have when you have a business? A lot of like online businesses are really low risk. It's really the brick and mortars. Like if you have property, whether you lease or you own as a storefront, you can experience a lot more losses than people realize. If your company owns multiple vehicles, right? You have workers comp. Like business can be very, very complicated when it comes to risks. So if your sole income is from a business, or if your primary income is from a business, and it's just first generation, you've just started, maybe in the first 5 years, you may have not experienced any of the large business losses. So I would just review and see what's sort of typical in your industry, even before you get into a business, to see not just what's the upside, but what are the reasons why people's businesses fail in that particular industry, right? What are some of the risks in that business, in that industry? And again, some are sort of common to if you have a brick and mortar, and some are more specific, more specialized. And usually when you're getting insurance, you can, if you have a good broker, they should inform you about the insurance needs for your particular industry. And sometimes you find that your rates are really, really high based on a particular industry that you're in. Like, I'll give you an example. In consulting, I had a friend that said she was consulting to healthcare companies. Now, because it's like healthcare, they put her in this like high risk bracket and quoted her really, really high insurance rates, even though she wasn't directly impacting people's health. But like, you know, the lawsuits in that industry can be really, really large. So it's also, that also may color your choice of what business. Some businesses are more profitable purely because they have less risk. So that's also something to be really mindful about. Don't just kind of chase the revenue and chase like the, you know, people paint a picture that's optimistic. Look at the people who've been in business for 5 to 10 years in your industry and really look at the risks that they faced. I think that people underestimate the downsides of business. And again, it's those periodic things. Like, again, if you're going to be a labor-based business, which means a lot of employees, you're going to have to deal with workers' comp, right? And like other like liabilities for your employees create a liabilities. If you're a solopreneur, again, you kind of you don't have any leverage, but you're also not taking on some of those liabilities and risks. Hello, how are you? So that's the thing when it comes to risk. So we'll just come through again, just do an evaluation. And I would say do it every 6 to 12 months. If you haven't done it in a really long time, just make a spreadsheet and say, here are the things that I rely on in my life. Happy birthday. And so whatever you rely on in your life, just write down what would happen. What could happen in your current situation? Because everyone's, you're welcome. Everyone has a different situation. So really think about sort of the catastrophic loss. This is usually what people think when they do risk, but also the intermediate loss. Like, what are some of the things and how are you protected against it? And again, do a trade-off. Oh yeah, thank you. I know. I'm trying to I want to share my knowledge with people. So really do that, like do an assessment and then go through, and then, you know, at some point you may have to engage other people, like the willingness of other people to help, right? This is why family is important, and friends and support network, because, it's think it through, because that throws people off. Those catastrophic and the sub-catastrophic, like my roof got, like we've had, our furnace went out. Our furnace went out 6 years ago on Christmas Eve, right? Furnace goes out. There is no let me wait on that spending, right? That's a sub-catastrophic. That's an immediate need. It's urgent, right? So identify potential urgent needs. And if you own a home, right, or own property, right? This is what happens when people are like, oh, you can just own real estate and you're making money. You're making money till 5 things go wrong in a month and you didn't have a cushion. So do the catastrophic and sub-catastrophic analysis. So everyone should do that and just write down, and then, you know, you're not all get it covered all in one day. Again, this is on your way to wealth building. Start addressing the risks, because you may do a really great job in, you know, income, taxation, and investments, and forget that you haven't mitigated any of the risks. So again, once you kind of get, once you get cash flow positive, or you're not cash flow challenge anymore, you kind of start adding these risk mitigation plans to your portfolio of tools, including some insurance. And again, always weigh the cost of the insurance with the potential benefit and say, could I self-insure? That's why with disability, that's why I don't recommend whole life insurance to most people. I say, you know what, really look at how much are you going to spend? Yeah, if it's not working. I know it was not working yesterday. I've been having problems with my internet again. Like the whole building is having problems with the internet, so we're gonna have to figure out how to solve it. Anyway, that's it for today. Thank you guys for joining, and I will be on tomorrow again because I'm on every day at 10 a.m. So thank you for joining and participating. And yeah, if you catch the replay, then you can hopefully get it without any interruptions. So I'll see you guys tomorrow, and thank you for your attention and for your time. And address your risks. Bye.